Hello traders. It's 8:01 a.m. Chicago time on Monday, the 11th of November, 2019. This is episode number 1636. I want to remind everyone that it is Veterans Day here in the United States, which is a holiday, a bank holiday. So the Treasury markets are not open today. Equities are open. Back in the day, that were not, and the futures are open. But in general, this is a holiday. I want to take a moment to just to put a word out for veterans everywhere, those men and women who put their lives on the line, and actually many of whom have perished in defense of our freedoms and so on. I want to take a moment to thank you for your service. You're a lot braver than I am. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Coming in to the markets this morning, we have basically a market that is a little bit risk off. Uh, the laggard today is crude oil down 78 cents, 1.36%. The Russell, the Dow, the Nasdaq, and the S&P follow, all down about 0.5% or 0.4%. The leader today is the cable. The typical assets that you would expect to be up higher are up today. The safety assets. In general, well, gold is a little bit off again. We're looking at a day where really prudence is important. It's likely to be fairly quiet. This morning, the volume on the S&P 500 is actually pretty decent, 186,000 so far in the extended session. But my expectation is we're likely not to get anywhere, not only because it's Monday, but because it's a bank holiday here. Schools are out as well. So that's where we stand this morning in terms of market posturing. The market has been, the indices have been selling off since the open. Again, clearly risk off from Friday's close, which was relatively strong. There's some interesting structures that were left behind on Friday, just basically banging on to the volume profile based areas, and almost perfect textbook like performance on Friday. We don't see that very often. I'll review that in a minute. The main theme, again, is, of course, the trade war. President Trump came out on Friday and stated that he didn't really agree to rolling back tariffs as part of this deal, and China's saying that nothing's going to happen without rolling back tariffs equally. And that's that. I mean, the turmoil, the nonsense in the UK still going on. Brexit, back and forth, elections, and so on and so forth. President Trump came out and said China trade talks were coming along nicely. I'd like to make a deal with China, but it had to be the right deal. Also described as incorrect reports that said how much the U.S. was ready to roll back. U.S. White House economic advisor Navarro said there's no agreement to roll back existing tariffs as part of phase one deal. This is in contradiction to what has been released last week and what the Chinese government has been negotiating for. So not sure if this throws a wrench in things. I think the market's a little bit, and pretty much everybody probably listening here is pretty much tired of this thing, where one thing is said and then the opposite thing is said, and then when that's said, it's usually well, we never actually said it in the past, but stuff is not being invented. So it just seems like there's just weird games going on. It's not a straight up negotiation. So that's where we are in terms of the calendar today. Pretty much anything we had is behind us. It's a holiday in the U.S., so there isn't anything on the calendar for the U.S. This evening at about 8:30 Eastern. The Australia gets its NAB business confidence for October, expecting zero. Expect it to be a high tier figure, but that's about it. And that's all there is. I expect, as I said, I expect that today is going to be fairly quiet. Let's take a look at what was expected on Friday. On Friday, expected some responsive buying into, if you recall, into that 89.90 area. Um, Really, it starts at 87, but let's call it 87 through 89. This area is expected to present some resistance. I expected responsive buying into that area. Sellers to step in with an impulse down, push back into 82.50, and then ultimately get into 73 and a quarter, which is the MC point of control for this region, and then ultimately get down into 70. That was the primary scenario. That did not work out. The secondary scenario is a push lower into 73 quarter to find a bid and an impulse back up and finish higher. This is exactly what happened on Friday, except that Friday went higher and went right back to the naked point of control up here at 30.92. Here's what Friday looked like. Didn't quite get to 86 early on. This is what I was looking for. I was looking for an 86 short down into 73. It managed to get to 73 by pushing through by a few ticks. 73 and a quarter is the MC point of control. Pushed through by 3 ticks, and then we get the impulse exactly as expected. We get the impulse back into mid, the prior low, VWAP. Kind of a crowded area here, and it ultimately ends up pushing through. And then where does it go? It goes right to the naked point of control up there at 92 even, and puts in a high at 92.50. So it takes out the expected low by 93 and a quarter and takes out the naked point of control by 2 ticks. I did not expect it to come back that far. I actually anticipated that it would get tangled up in the 87 to 89 area, and it ended up pushing all the way through. A normal day type. With a very clear middle distribution and the start of an upper distribution, pretty weak high. I did expect this to open and test the high in the overnight session on Sunday night once the markets reopened from the weekend. Was not able to do that. It pushed to 92 and a quarter, missed the high by a tick, and then from there it's been trickling down and selling off into 30.77.75, currently the low 76.75. So we've taken back quite a bit here, and we've again left behind this even more critical area now in the 86.87. So we had a low volume node right there. This is the area that I expected to be tested for a turn to 73, consolidation and a push potentially to 70, right? Potentially to 70. That was scenario 1. And what we did is we built another low volume node right on top of that. We're beneath that. I'm expecting and anticipating, as I was on Friday, and I invite you to watch that video from Friday, I expect that there would likely be a lot of overhead. Barring news, I expect that there would be the pushes up are likely to be challenged in this area. And what we ended up with on Friday is the beginning of what potentially is one time framing down. So let's take a look at that for a minute. There's the composite. Here's the composite. And there's the point of control, the black line. And you can see we tagged it by a couple ticks before rallying on Friday. So we had new all-time highs on Thursday, and we finished weakish on Thursday, and we came in on the low end of the range. And so what we ended up on Friday with is lower high, lower low. We've breached the low of Thursday to set us off on what is likely to be one-time framing lower. So we're looking for lower highs on retests coming up. The anticipation is a push higher is likely to give us a lower high on a higher probability than a higher high. Again, barring news, we have 3,100 just above us, but overall the market's really having a hard time hanging on to higher prices. We actually specifically see that in the Russell in the small caps as well. So overall, we did breach. We were doing the same thing earlier in the week. We were in this nice little channel, and we gapped up, and then now we're testing the top end of the channel here, and overall, it might end up being a secondary channel that sets up this way. Now, I don't want to sit here and color just a short side play and have everyone skewed to the short side bias, or invite those who are only who are perma bears or only look at things from the short side to become more seeking of trades or so on. But I'm just telling you, based on what I'm seeing here and how it's responding, it does look like it is having a hard time accepting higher prices and maintaining those prices on the tests higher. The argument for the long, of course, for the long side is you don't really need much of an argument. The trend, the overall bigger picture trend. So when we back off and we go to the composite, the overall trend is higher, and the market's facilitating trade and price discovery higher in the longer run. It's doing so through a lot of gaps. So you could see here, there's clearly it's a bull market, right? So that's I'm only interested in a day time frame as I'm trading or as I'm talking to you here. So I'm looking at the fact that it is likely to test out the region below. It still has some repair to do to the structure beneath it, down into the 30, 40, 30, 50, specifically 30, 50 area is important. And I'm expecting a test to that at some point. Let's take a look at this composite yet again. If I bring in everything, composites usually drawn from the point at which the market it goes vertical, and gaps are kind of gaps are a clear sign that the market has gone vertical. And you could see that we've got this low volume node on the composite, and that coincides with the low volume node we put in there and there. I see that as initial resistance, 87, 88, the 87, 88 area. I'm expecting the market to have difficulty pushing through on the first test. And then as we roll over, we get into this low volume node down here at 3065, which is expected to be this next area. You can see 3065 was the high right here, and then we tested it by a couple of points. If you recall last week, I was aiming for that 3065 area from 3077, and we ended up doing the 3077 and the 65 through 63 on news. We ended up doing it in one sweep. Very, very poor way to get a key structured trade kind of taken away. But that's the way of the market. So my expectation is it's likely to attempt to test lower into that low volume node area at 365. That's the key expectation. At what point during the week, how, all that stuff, that remains to be determined by the market, and that remains to be discovered. Let's take a look at ctbookmap.pro. We're going to take a look at the full depth. This is the overnight session here. The overnight session and how it's proceeded so far, and you can see that from the open, it's been sellers, 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 sellers. Now, the cumulative delta has made its way back to neutral, even though price is far from the open. So there is a little bit of buying that's going on here ahead of the open, but overall, this thing appears to be free to continue to drop from a liquidity point of view down into 30.73, and then again 30.70. That was the key target for Friday. Also has some liquidity in it right here. So 73 liquidity, 70, and then above us we have 95, which is just above that point of control and above, just below the weekly high, and then 3,100 is going to maintain a pretty good offer as it's a major strike and it's a century figure. So that's the overall depth. If I go wider and look at even wider depth down into 30.50. We see it's broken up a little bit, but I expect that as the market drops into 30.50, I expect liquidity to show up in this gap zone, stock zone area in the 30.50. So that's how things are shaping up currently. Let's take a look at what we're expecting for today. Okay. So for today, we're in this kind of balance-ish area. The expectation for today is an open auction in range, in value, and an attempt to push higher. I'm looking for it to rotate back up to 3084, 3085-ish, and I'm looking for it to turn over and just go completely sideways into the session and potential drift down into 73, but I'm not expecting too much. On the upside, what's above, the key areas to engage are 3080, 250, and 3086-ish. And that's where I'm looking for this turn. This is what I drew the turn to, and I'm expecting it to kind of waddle around in here. Not expecting a lot of range. Again, Veterans Day, holiday today. So mostly sideways. The secondary scenario is a mirror image, an attempt lower, open auction, an attempt to push lower into 73, poke through, and then come back up, and then just simply consolidate into the range into tomorrow. I expect, based on that tomorrow we're likely to see an expansion of the range and some volatility as the market gets back, and it's Tuesday. So that's where we stand. Hopefully you're gaining something from these videos every morning. If you are, make sure others know about it. We start here at 9 Eastern every morning. I'll catch you tomorrow morning. Hopefully you'll find this helpful. Take care.